number of loans here, and the forgiveness process is underway here at our bank. And I think most banks have started their forgiveness process, but there are a lot of questions out there, and we know there's a lot of questions. It's not an easy application to get through. So here at the chamber, we decided to ask a couple subject matter experts to join us on this webinar today. We have Dean Martiniello. Did I say that right?
Yeah, trust me, John. I butcher my last name too, so with a Boston accent.
Dan is SBA lender relationship specialist with the SBA, so he lives and breathes PPP loans these days, both the initial loans and forgiveness. And then we also asked Cliff Robbins to join. He's a senior business advisor with the Massachusetts Small Business Development Center. I think you mentioned, Cliff, you're working with over 300 small businesses.
Just this past year, yeah.
Yeah, everything from obviously financials and PPP understanding, but they have a lot of other resources that I think small businesses can take advantage of. So after Dan does his presentation, we do have a second presentation that Cliff's gonna run through. It kind of talks about all the benefits that the Mass Small Business Development Center has, and that our business owners in the area could capitalize on and help them not only get through this trying time, but if they have other questions or they're trying to grow their business, there might be ways that they can help them. So without further ado, I'll turn it over to Dan. He's going to start our presentation. I myself will be adding some commentary as he goes through, as some of the applications I've seen, some of the common errors or misconceptions that maybe some of the borrowers have out there. So I'll just add some commentary as we go through. So Dan, take it away.
All right, thanks, John, and thank you everybody who took the time out of the day to join in. I know I came on a presentation, I think it was over the summertime, and spoke with all you folks. So I hope everybody's doing well, and I know it's been still trying times. We're dealing with the economy and everything else that's going on in the United States right now. But glad to have you again here today. So we'll start it off. We just want to today we want to give you a breakdown of the actual Paycheck Protection Program, the forgiveness process, as well as talk about some things that we were initially told recently as far as what changes may be in the works in the future. Also, we want to talk about the breakdown of the different applications, because there's been some new information there. Also, a new application came out recently within the last few weeks. And then we want to give you an overview of the SBA, what they are continuing to do to help small businesses, grow and try to strive through this economic crisis. So here you'll see on slide 3, and I know I think several of you have gotten this slide deck before. So you may have already seen this, but if you did not get the slide deck, we will make sure that it gets sent out to you, because there's a lot of good information that everybody can soak in. But so as you can see here, the Paycheck Protection, the SBA actually came out with basically a 2-page breakdown of what the borrower needs to do from start to finish when it comes to the forgiveness process. So as you can see, there's 4 main bullets. One thing I always want to stress is during this process, you should document everything when it comes to your eligible payroll costs, your eligible non-payroll costs, any HR concerns, and that's what we're going to go over today. Make sure it's document. I know John and his team probably are familiar with myself and my colleagues at the SBA. We always tell them on the lender side, document. So that's big at the SBA. So first and foremost, anytime you're dealing with the application, you want to first connect with the lender that you initially did your PPP application with, because it's going to vary as far as how they want this process done from bank to bank. Some are going to have you fill out the paper applications. Some are going to have you do it on their websites through an online vendor that they might be getting assistance from. So make sure you connect with your local lender and find out what method that they're using. So, you know, you're not filling out an application when you were supposed to do it online. And then also too, you can connect with them and find out which application is best for you. And we'll talk about, you know, some of that here today as well. Make sure, again, you compile all of your documentation. You want to have that readily available for your lender, because the reason your lender is asking for that is because they need to submit certain pieces of documentation to the SBA. So the SBA provided all of the lenders what's called a forgiveness portal. So they have to submit the application as well as some supporting documentation for the SBA to make the final determination on remittance of their PPP loan. So try your best to make sure you work with them. If your lender notices that there may be any calculation errors, you know, which, you know, could be common, you know, they might be reaching out for you for clarification on certain items. Make sure you work, you know, as best as you can to remedy those calculation issues. And then, you know, at the end, you want to make sure everything's ready for submission. And then throughout the process, you want to continue to communicate, you know, with your lender. Your lender will get a notification from the SBA on certain stages that the loan is in, or if it's going to be come up for review. You know, so there's certain times where your lender may reach out to you for additional information based on what the SBA is coming back with them, because the SBA is going to be spot checking a variety of different loans. It's not just large loans that they're going to be looking at. They're looking at small dollar loans as well. So this is why it's very important to have all of your documentation readily available. You know, and as an example, we had a lender reach out to us the other day. They got a notification from the SBA that a loan of $14,000 was going under review. So just keep that in mind. It's really, you know, they're looking at all loan sizes.
Dan, if I could just make a couple commentaries there.
Sure.
I know that font was a little small, folks. I think when you get the deck, you'll be able to see everything. But all this information is also readily available. And it's from the application, so you'll know what you need. I guess the only thing I'll add is it asks, you know, it has mortgage interest. It says utilities. All those additional costs can help cover your payroll expense. Cover your forgiveness amount. However, if your payroll, because if you choose 24 weeks, your payroll covers the full amount of your loan, you don't need to submit all that other documentation. So you won't need to actually go through and get all the utility payments and get your mortgage interest or your rent expense if your payroll covers the full loan amount. So I don't want people to think that they need to gather all of that information. If their payroll does cover the full amount of their loan, they don't need that additional documentation.
Yes, correct, John. And thanks you for that clarification. Yeah, the program itself, and I'm sure most of you, if you started looking into this process from April to now, there has been numerous changes. I want to say we had at least 22, 23 interim final rules, so program changes during the last several months. You know, so that's made things a little bit confusing on everybody's end, but you know, a lot of these changes are for the better. So I want to touch upon some of those changes here as hopefully everybody can see on slide 4, which is the changes that happened when the Flexibility Act was signed in the beginning of June. So initially, you know, if you applied for a PPP loan back in April or May, you know, there were some rules when it comes to your covered period. There was rules on, you know, how much money, how much of the funds you had to utilize for payroll versus non-payroll expenses. And there were some rules when it comes to different safe harbors. So the Flexibility Act basically changed that and made it a little bit more, I don't know another word better to say, but flexible for the small businesses. So basically what happened was now small businesses, they can elect to either stick with their 8-week covered period that they initially had if you applied before June 5th, or go to a 24-week covered period to utilize your funds. Also, when it came to requirements of how much funds needed to be utilized for payroll expenses, that we lowered the requirement from 75% to 60%. So we allow small businesses to utilize more funds for non-payroll expenses. Also, too, the deferral period. Initially, the loans had a 6-month deferral period. Now every loan has a 10-month deferral period that starts after your covered period is over. So whichever covered period, 8-week or 24-week you decided to use, your 10-month deferral period comes into play. What I do want to elaborate a little bit on that deferral period, because there is some confusion. I feel like we're getting this a lot lately, especially now that lenders are starting to get remittance back on the forgiveness loans. The 10-month deferral period really allows you as the borrower, it gives you that time frame to submit forgiveness to your lender. But if your covered period ended, say, today, and 30 days from now you decided to submit your loan forgiveness, and then the SBA came back with the final remittance within another month, once your lender receives the remittance, payments are gonna, if you owe anything, if it wasn't fully forgiven, if you owe something, that your payments are gonna start to become due. So your lender is gonna be reaching out to you, notifying you what amount was not forgiven, and then they're gonna start setting up a payment structure. So, if you're a borrower concerned about maximizing your deferral period, that deferral period technically ends once the SBA remits forgiveness to the lender. I just want to kind of clarify that. And then also too, when it comes to maturities, if you were a small business that applied prior to the beginning of June, you're on a 2-year term. Anything from June 5th or after, you probably have a 5-year maturity. However, you can talk to your lender about extending your maturity period on the PPP if you feel like you're gonna owe anything on that. But with that, that is a discretion that's left up to the lender. So that's an agreement between the borrower and the lender, and it's ultimately the lender's decision. So those would be handled case by case, and it's not a guarantee just because you ask for a request. So just keep that in mind. And then with the Flexibility Act, there were some different safe harbors that got extended, and also became safe harbors that allowed some more flexibility, as well, that we'll go over on these next slides. So as far as the application goes, the most recent application that just came out in October was Form 3508S. So if you're a small business that has a PPP loan of $50,000 or less, you should be utilizing the 3508S. Okay, so this is an application that the SBA and the Treasury came up with that hopefully is going to streamline the process for your smaller dollar loans. As you can see here, I know everybody's screen might be, a little bit small on this end, but the screenshot of the actual application itself, all you're really doing is submitting your business information, your basic PPP loan information, and then certifying that all of the information that you have when it comes to how you came to calculations, you're just certifying. You're not actually needing to show the calculations when you're utilizing this form. So as you can see here on the bullets, you're exempt from reductions in loan forgiveness amounts based on your reductions of the full-time equivalents, or your FTE employees, or in salary and wages. So all those reductions that you may have had to have looked into in the past, with this application, based on your loan amount, you're exempt. And then, but just keep in mind, the SBA may still request information and documents, if your loan goes up for review, as to how you got to your calculation. So even though you don't have to supply your calculations, you still want to make sure you have all your documentation readily available, because like I said, any loan size can get submitted for review. And at the end of the day, the SBA is just looking to make sure that, small businesses are utilizing these funds in the proper manner, because this is taxpayer dollars that's ultimately being used when it comes to the forgiveness side of things.
Hey,
John,
Dan,
did you want to add anything to that?
Yeah, I'm just going to add, we believe that the SBA is still looking for backup data to be sent with this. Now, granted, the calculations don't have to be, they're not on the app or whatnot. So we're asking borrowers to send in their payroll reports, et cetera. Because to your point, there's a likelihood that some of these are going to get reviewed, and you need to make sure that you have the backup data. So if you have it, you might as well supply it. So we're recommending and asking folks for us to approve it, to actually send in. I think most banks are going to be looking for that backup data. Now, no one's going to do any calculations, no one's going to validate, but we are going to be asking for that stuff. So like if you're a scheduled sole prop, you do need to supply your Schedule C for 2019 with this application. They just got to make sure that your income is comparable to what the loan amount is. That's just what we're seeing.
Yeah, great point. Yeah, like John's saying, if you're, every lender maybe be doing it different, but to John's point, probably more lenders are still going to want that to be supplied with that documentation, because you want to make sure, everybody wants to make sure at the end of the day that the funds were used properly, and that no one, the SBA doesn't come back later and have to, come back and say that they renege on forgiveness. That's not what a lender wants. That's not what you as the borrower wants. And the SBA doesn't want that. So, the reason why your lenders will, ask for that, it's for your benefit at the end of the day as a borrower and their customer.
Yeah, because there's stiff penalties if they didn't use it appropriately.
Yeah, certainly. So just on this slide, just I'll quickly go by it, but so there's technically 3 applications out. So the first one I just touched upon is that newest one, the 3508S. Then you have Form 3508EZ, which applies a lot of these safe harbors. And then also, if you're a sole proprietor, if you're an independent contractor that didn't have any employees at the time of your initial application, you can utilize the EZ application, especially if your loan was for over $50,000. And then you have your standard Form 3508, which would be for anybody else that doesn't fit under the safe harbors, or isn't a sole proprietor or independent contractor. You would more than likely utilize that. With that said, we're going to focus mainly on the 3508S and the EZ, because the SBA, took a big look at the loans overall, and they're assuming that over 80% of the loans being submitted for forgiveness will utilize either the EZ, 3508EZ or 3508S. So as far as the EZ application goes, so one thing you want to know when it comes to figuring out which application you can use and how do you fill out each application, SBA.gov or the Treasury.gov is where you want to go for that information. Also talk with your lender or some of our resource partners, that will know offhand, as well. But the instruction, each application has their own set of instructions. Some of it, is the same, information, but they do have their own set of instructions. And as you'll see on the EZ application, the top part of the instructions will basically have a couple boxes that state if you can check one of these boxes, you can utilize that particular application. So the first bullet, if you gain access to the instructions, would be if you're a self-employed individual, independent contractor, or a sole proprietor, and you didn't have any employees at the time of the PPP loan application, and you didn't include any employee salaries with your computation average, you can utilize the EZ forgiveness, and you should be utilizing the EZ forgiveness application. Also, when it comes to different safe harbors. So when it comes to, you as the borrower, if you didn't reduce annual salary or hourly wages of any employee by 25% during your covered period or your alternative covered period, compared to basically the first quarter of 2020. And you can answer yes to one of these two bullets down below. You as the borrower did not reduce your number of employees or the average paid hours of employees between January 1st and the end of your covered period, or you as the borrower weren't unable to operate during the covered period at the same level of business activity as before February 15th. So that's that benchmark of when we consider the pandemic, I guess, officially starting, due to compliance with requirements established or guidance issued between March 1st and December 31st. So if you can, check off one of those three boxes, you can utilize the easy. And we'll go over too some of the safe harbors that are in place when it comes to reduction of salaries, reduction of employees, because there are safe harbors in place that will not negatively affect your forgiveness if you fall under certain safe harbors. And another thing when it comes to reducing your hourly your employees' wages by 25% or more, we're not taking into consideration anybody that you had to reduce because of program requirements. So at the beginning, when you applied for the loan, remember when you were computing your averages, you had to, if you had any employee that made over $100,000 annually, there was a cap on employees. So you can't compute anybody more than $100,000. So you might have an employee that got reduced 25% depending on what they made, but they're not going to, again, ding you on forgiveness because of the cap restrictions. So just keep that in mind. That's not considered in this computation. And as you can see on the easy application, it's more, the 3508S is a one-pager. Easy is a two-pager. There are calculations. Like John was saying earlier, you will need to supply all the information. And if you're questioning what information you need to apply, look at the application instructions, talk to your lender, talk to our resource partners. The most recent guidance that was supplied on SBA.gov with that two-pager that I showed at the beginning has all of that information. So if you're questioning whether you have to supply information, it's all written on the instructions. So on these next few slides, we'll just go over some, some obvious things such as payroll costs, non-payroll costs that are eligible under this program. I'm not going to go over each bullet because we still, have a lot to go over and we want to answer questions and everything at the end. But, this is just a general breakdown. And again, all of this information is listed on the instructions. So this is taken directly from the instructions. So if you're wondering, on certain caps, depending on your covered period, you can find that all on the instructions. So payroll costs, include, are paid, making sure that they're paid or incurred during your covered period. That means they're eligible for forgiveness. They include any sort of salary, wages, commissions, or other similar compensations up to that $100,000 cap. And as you can see, depending on what covered period you used, your employees are capped based on your either 24-week covered period or 8-week covered period. And then it kind of gives you a breakdown based on, self-employed individuals, general partners. So I think John mentioned earlier, if you're a sole prop self-employed individual, you're limited to, 2.5 months of your 2019 net income, and it goes on to elaborate on some more things.
Yeah, the only thing I'll add there, and I see this a lot because we get a lot of payroll report, which is great. The payroll companies are fabulous. They have these great reports. They're already built. You just give them the date range of your covered period and they'll give you those reports. They have the caps in there for employees at the 100,000. What they don't have is the owner caps. I find all the time they don't have the owner caps in there. So as an owner, you're limited to, if you could go back to that slide. Okay. Yeah. If you look at the first bullet there, owner employees are capped by their 2019 cash compensation. And it's 2.5 months of that is what you're able to take. And the maximum cap that an owner could have is 20,833. So that's one thing I think a lot of these applications we're getting don't have that owner compensation cap at that 20,833.
Yes, definitely. No, that's good to know, because this is, and it's one good thing where you folks are hearing from both of us is, you know, myself and my colleagues Eli and Carlos, we really handle, you know, predominantly just interpretation of the rules and going over the guidance. You know, we don't actually see the submission of all the documentation, so we don't do we ourselves at the district office don't get to look at all of the payroll documentation that's being supplied, you know, to the lenders, and we're not, you know, looking at the calculation. So, you know, it's good to get that, you know, both views on it, because it's, you know, interpreting the rules and interpreting the caps and things like that is much different than when you're actually having to go through the documentation like the lenders do. So, you know, I think everybody's going to benefit, you know, from hearing both, you know, ends of that. So the non-payroll costs, you know, as you can see here, you know, you want to make sure that, you know, a couple key points is all your obligations and services, they must have been in place, you know, prior to 2015. I mean, 2/15/2020. Sorry, February 15, 2020 to be considered. Now, we get some questions when it comes to that. Let's say your lease came up maybe in the middle of your covered period. That's okay, as long as you're with the same leaseholder during 2/15 or prior. You know, if your lease came due and you're just renewing your lease, that's still covered. You know, it's just if you had a totally new utility, say for instance, that you did not have prior to 2/15, that's when it wouldn't be considered an eligible non-payroll cost. So, you know, anything that comes up for renewal is perfectly fine, because we do get that question a lot from small businesses that are concerned. So another thing too, you want to make sure, you know, due to the Flexibility Act, you know, you are limited to now up to 40% of the PPP funds you can utilize for non-payroll costs and still be forgiven. So, you know, that was a change. But you want to make sure that when it comes to non-payroll costs, that you're not prepaying anything. So the cost has to be incurred during your covered period. Your bill might come after your covered period, and that's fine, as long as your utility bill shows that the amount incurred was during a covered period, that's fine. But any sort of prepayment would not be considered eligible.
Hey, Dan, if I could just add a couple things there.
Sure.
You need to supply the bank and the SBA with the statement showing the February was already, you already had contract, or you already had that utility and
lease
or
agreement,
lease in place. So leases, you need to supply the lease that shows when it was in place, and it was in place before February 15th. You need to show your Verizon bill for February. You need to show your gas bill for February, to show all those contracts were in place prior to receiving the loan in the covered period starting. Additionally, you need to supply every single bank, or every single statement that came for that utility, and the proof of payment for that utility. You need to show a copy of the rent payments that you made. And rent payments to an affiliated company don't apply, meaning if you own your own building and you're paying rent to an LLC or a realty trust that you own, you can't count that rent payment. We see that a lot too. They're adding their rents in there. The only eligible expense there would be your mortgage interest on that property if it's an affiliated company like that. So we're seeing that a lot.
Yeah, and this is why, you know, said at the beginning, document. You want to have all of your ducks in a row. You want to have all of your documentation ready to go. You don't want to have to submit an application, whether it's online with your lender or paper application, and then not have all of that documentation that's required, because then you're going to be going back and forth, and that's where mistakes can sometimes be made. So, I always stress to everybody, just take your time. You have that 10-month deferral period after your covered period is over, to make sure everything you have is in order. So that's important. And if you need a second set of eyes, if you need some advisement, the SBA partners with several resource partners. As you see, Cliff is on with us today, for the small business development centers. We also partner with SCORE. We partner with the Center for Women in Enterprise and the Veterans Business Outreach Center. All the representatives, the mentors, the advisors from these organizations, they can help you, gather all these documents and make sure that, you have everything that's required.
And again, that's why earlier I mentioned, if your payroll cost covers 100% of your loan, you don't need to gather all that other information, which I know is painful to try and get all that stuff. So if you can avoid it, great. If the payroll covers the full amount of the loan, just submit that. Don't worry about adding all that additional information.
Yep. So the next set of slides, we're just going to go over some safe harbors when it comes to maintaining FTEs. And I know we were just talking about this right before you folks logged in. This is probably the most confusing part, or in my opinion, it's probably the most confusing part of the process when it comes to forgiveness. And reason being is, at the beginning stages of the PPP process, when people are applying for the actual loan funds, the application itself only asked the borrowers how many employees you have. They didn't ask how many FTEs and what's considered an FTE. So, there's a lot of borrowers that put, that they had 40 employees, but they didn't give a break. There was no breakdown of who's part-time, who's full-time, whatnot. So some of these safe harbors put into place, hopefully will, relieve some of the stress and some of the burden on the small businesses when it comes to maintaining FTEs. So we'll go over here in the next few slides of what you need to do to maintain it, but then the safe harbors are in place that apply to you if you run into some issues maintaining your FTEs. So here you can see the borrower, must maintain their FTEs during your covered period as compared to, a particular reference period. So whether that was, February 15, 2019 through June 30th, 2019, or you used the first few months of 2020, or if you're a seasonal business, you could have elected to choose any 12-week consecutive period between May 1st and of 2019 and September 15th, 2019. Your forgiveness could be reduced proportionally by the percentage of reduction in FTE. So FTE means 40 hours or more. If it's less than 40, you can prorate based on the amount of hours, or you can use a half of FTE for any part-time employees. So if you have, say, 10 part-time employees and 5 of them work 30 hours and 5 of them work 10 hours, you can put everybody at a half of an employee, or you can prorate them based on the actual amount of hours they work. So 30 hours would be 0.75, 10 hours would be 0.25. So like that. So that's up to you. The borrower, you as the borrower are exempt from such a reduction if FTE reduction safe harbor applies. So if you were able to maintain and hire back your employees by December 31st, 2020.
The only thing I'll add there is the payroll companies have been fabulous with helping with this as well. They can run your FTE reports, because a lot of business owners that we talk to say, I got 12 employees, 8 are full-time, 4 are part-time, what's my FTE? Instead of you having to figure out all the calculations, if you have a payroll company, ask them for your FTE report for the covered period. And then they can also give you the FTE reports for those reference periods that Dan just covered. Because you have to show that your FTE within your 24 weeks or 8 weeks is equal to or higher than those reference periods that that he mentioned before, whether it's January through February of 2020, or if you look at February 15th through June 30th of 19. So when you get those FTE reports, if you see that in 19 you had lower FTE number than in January 1st through February 29th of 2020, use the lower of those two numbers. So you get those FTE reports from your payroll company, see which one has the lower FTE count. If they're both, under or equal to what your covered period is, it doesn't matter which one you use. But if there's one that's less than the other one, and it's going to help you get either more forgiveness or 100% forgiveness, make sure you use that report.
Good points, John. So again, on this next slide, it's just kind of a breakdown of how you do the actual calculations and the steps you would have to perform, to do the calculations. And like, John was just stating, if you have a payroll company, this is where they make their money, have them help you with this, as best as they can. And if you don't, there's still help out there. Like I was saying, we do have our resource partners. The resource partners are free they offer free advice and free services to you, the borrower. So, that's another thing. If you have an accountant that can help you with these things, or another type of business advisor, make sure that you're, connecting with them, on these things, just to make sure when you go to the bank, that you're maximizing the amount of forgiveness that you truly are entitled to. So, I'll just go over some of it here. So forgiveness will be reduced by the dollar amount of any wage reduction in excess of 25% of salary wages earned between Jan 1st and through March 31st, 2020. Again, if you had to reduce someone because of the program requirements of the cap of 100,000, that's not included. You're not going to be knocked for something that was a program requirement. So they're not going to say, well, you reduced it. No, the program required you to. So, calculations is performed per employee and not aggregate. So, these are the actual steps to go over that, and then it also takes into consideration if different safe harbors are not met. So you want to just keep that in mind. And you want to make sure that anyone that was used as an FTE reduction, you want to make sure, the count is correct. Ultimately, only individuals with reduced salaries or hourly rates would be considered. Now, on this next slide here, this is the documentation you'd be required, to maintain to meet certain safe harbors. So if you're rehiring or restoring salary and wage levels by December 31st, 2020 or earlier, you want to make sure that you're documenting in good faith, you're having good faith offers to rehire and show proof of employee decline. So, we do get a lot of questions, can I send them a text? Because we're dealing with all sorts of business, very small businesses, to much, businesses that are small, but they're much larger. So that actually have a quote unquote HR wing to it. You want to make sure everything is in writing when it comes to documenting your good faith offers and your rehiring employees and employees showing declines. You want to kind of stay away from, text messaging and things like that. You want to have written documentation. So like it shows here in the bullets, must be a written offer during the cover period at the same salary and hours as their last regular pay period. Also, you want to maintain record of documenting the offer and its rejection if that happened. And also, too, you want to notify state unemployment office within the 30 days of the employee rejection. You are required to do that if you're going to meet the Safe Harbor program, because the whole intent of this program initially is to keep people on your payroll, keep individuals employed, right? Not so they want to refrain from any sort of double dipping into the system. So you do have to notify them, because when someone goes to unemployment, they're telling unemployment that they cannot find applicable work. But if you're offering them their job back at the full salary levels and hourly levels, then they're technically not stating the truth. So also too, you want to document any changes in your headcount. So any changes that change your FTE. So you may have fired someone for good cause. That's still going to happen. I mean, I know 2020 is a crazy year, but these things are going to happen. Voluntary resignations, people are retiring. Those are still going to happen. Voluntary requests for reduced schedule. I know a lot of parents out there, for example, they might be requesting a reduced schedule because they have to deal with their children with virtual schooling. I'm in the same boat. So you might have a lot of that, and those are things that are out of your control, so that may affect your FTE. So the SBA is not going to, again, ding you on the forgiveness. The borrower, another bullet is the borrower unable to rehire similarly qualified employees for unfilled positions. So maybe you had you fired someone for good cause, maybe a couple people resigned, maybe they retired, different health restrictions, whatever the case may be, but you couldn't rehire anybody, that was qualified. As long as you're showing, those good faith efforts, again, the safe harbor is in place for that. So, the last bullet, that star, your FTE reductions that fall under these categories do not affect the borrower's loan forgiveness.
The only thing I'll add there is just a reminder, if the loan's 50,000 or less, none of this applies. You can use the S form and you don't have to worry about your FTE counts.
Yeah, that's right. And that's why we're hoping it's going to be more streamlined and definitely relieve some of the burden for small businesses when it comes to, this complicated issue of FTEs. So, this is just, again, for the easy application, just a ending process of the breakdown. So when you're talking about your employers, so you want to add the total eligible payroll and non-payroll costs incurred and paid during the covered period following disbursement. Make sure you calculate any reduction in payroll greater than 25% of the prior quarter by the employee. Reduce the total eligible expenses by any payroll reduction, if applicable, and if safe harbors were not met, and then calculate any percentage decrease in FTEs from the 24-week covered period versus whatever comparison period you used. And then apply that decrease in the FTEs to the eligible total expenses, and then calculate whether the payroll costs are at least 60% of eligible costs. But like John was saying earlier, if you used 100% of the loan proceeds for PPP, you're going to know, based on that calculation. But it's just, you're going to see that on the easy. This is the easy application that we're referring to. So you'll see how that calculation is broken down. So you just follow the bullets. And I'm not going to go through every one of these slides because this is just for a reference point for you as the small business. We're giving these slides to everybody. This is just a breakdown of how the easy application and what they're actually looking for in each section. So, on these last few slides, you want to make sure you have your employees at the time of loan application you have on there. Very important about the idle advance. So that's another thing that's been, it's been confusing and it's definitely been somewhat of a burden with small businesses. So when the CARES Act initially came out, we initially had the economic injury disaster loan program. So that program, had a lot of the same purposes, for small businesses, but basically you can utilize that loan for expenses had your business had the pandemic not happened. But with that said, the CARES Act itself had writing in it that stated that basically a business entity could not receive more than one grant. So the idle loan has that two parts. It had an advance and it had your actual loan. The advance was considered a grant. So that advance of up to 10,000, not everybody got 10,000, but that's considered a grant. The PPP, for all intents and purposes, is considered a grant if it's fully forgiven as well. So basically the way the CARES Act was applied, you have to, a business entity cannot have two sets of grants. So they actually had to lump the advance in with the PPP when it comes to forgiveness and apply that to the overall forgiveness remittance. So if you did get an advance and you're applying with your PPP forgiveness application, you may owe based on how much of those funds you utilized. If it, so it is, couple things that we heard recently from Senator Coons down in, I think he's Delaware, if I'm not mistaken. He's on the Small Business Committee. He did say that is one of the hot topics, in Congress, if they do decide to eventually come up with a second stimulus package. That is probably the one thing that we may see changed. As far as how that's going to affect PPP borrowers that have already gotten their remittance, I would assume that, if you've gotten a remittance and the idle advance has been applied and you've been paying on that for a few months, they may do some sort of reimbursement. So I just want to make sure you folks are aware of that. From what we've also heard too, when it comes to changes to the PPP program, changes to or a new stimulus package, he also told us realistically they're looking at maybe February would be the time frame of when a second stimulus package realistically would come to fruition. But again, with everything going on right now, that's completely up in the air. This was as of last week. It was before the election, so that he made these statements to us. But so that could change. But that's just where it stands, right now. So we really don't know, what positive changes. But based on what he said, both sides of the House do want to make some more positive changes to the PPP program specifically. It's just all the other stuff that applies to that stimulus package is what really is holding things up. So again, these are just a breakdown of the line items on the Easy application itself. And I'll just kind of go by these slides because it's just really there for you as a reference point if you need that. And then also it breaks down like your owner's compensation replacement. We were talking, I think John mentioned that earlier when we were talking about eligible, payroll costs. Here's the breakdown when it comes to the owner compensation replacement and what your caps are depending on the cover period you use. So if you used an 8-week covered period, your cap is $15,385. If you utilized a 24-week covered period, the cap would be $20,833. And so these next few slides, again, this is taken directly from the instructions from the Easy application. So this is a breakdown of all the documentation that is required for submission. So it first goes over what payroll documents each borrower must submit, and then also non-payroll documents if you utilized funds for non-payroll expenses. So that's a full breakdown. So if you ever need to reference that, you can utilize this PowerPoint, or you can print out the instructions, get them from SBA.gov or Treasury.gov. So couple other bullets that I want to touch upon because I know PPP forgiveness is the hot button issue, but there's several other things that we want to remind you of for your small business, because I know here in Massachusetts, Governor Baker, they're putting more mandates, so a lot of these things may affect your small business in the long term, especially going into the winter. The economic injury disaster loan, so that is still available. The advance itself is not available, but the economic injury disaster loan is still available on SBA.gov. So this is an actual loan. This is not intended to be forgiven, but this is a long-term loan that you can use, to basically utilize for normal business expenses had the pandemic not happened. So these loans right now, they're going up to $150,000. This is a loan that's taken directly, applied directly through the SBA. So typically with the SBA, we're not direct lenders. We have loan programs that our lending partners utilize, but we're not the ones directly doing the lending. However, with the economic injury disaster loan, the SBA is doing the direct lending. So you apply on our website. So I shared the link with everybody here. The application's pretty simple. It's only about a few pages, but probably takes me 5-10 minutes. And there's really, if you looked into it in the beginning, when everything, came out with the CARES Act, you probably would be frustrated with the amount of documentation that you needed to supply at the beginning. That has completely changed over the course of time, and you really aren't asked to supply too much information. They do look at them on a case-by-case basis, but overall, most small businesses aren't asked to really supply much, if at all, documentation other than your bank account information, maybe some tax verification and info, but nothing too strenuous. So if you just a couple tidbits on that as well as far as the terms. So these loans go up to 30 years. If you're a business, a fixed business, if you're not a nonprofit, you can your rate will be at fixed 3.75. And if you're a nonprofit, it's at 2.75. And what's good about the economic injury disaster loans too is the amount of businesses, whether and nonprofits and other entities that may not normally fit under the SBA eligibility wing, a lot of them can actually apply for the economic injury disaster loan. There's really not too many businesses or organizations that aren't eligible. So whether it's nonprofits, whether it's different religious organizations, a lot of them are eligible to apply for this program, which is not always the case with a lot of SBA loan programs. And then, as you can see here, on the frequently asked questions section, they may be collateral requirements if the loan's over $25,000. It does require personal guarantees if the loan exceeds $200,000. So most of the loans right now, you're not really requiring of a personal guarantee, which again is not typical of most of our loan programs. So again, it's not intended to be forgiven. This is a small business loan. And then where do you find, the most accurate information? Because we get this a lot at the office. Folks read different articles or they get information from outside sources. If you really want to make sure that you have the correct information when it comes to the PPP program or any SBA program, make sure you go to sba.gov. We post all of the interim rules, all of the instructions for the applications, any other sort of guidance that pertains to the PPP is posted on sba.gov. Also, it's posted on treasury.gov. So all of that information you can find on both of their websites. And then if you need further assistance, I know many of you may have accountants that you're working with or other business advisors you're working with, your payroll companies. They're all great sources to utilize during these times. However, the SBA also partners with a variety of organizations. Like I said earlier, SCORE, the Massachusetts Small Business Development Center, and Cliff is going to give you some further information on what the SBDCs do and how they help small businesses, and the Center for Women and Enterprise and the Veterans Business Outreach Center. So as you can see here, they provide a variety of technical assistance outside of, the PPP and the CARES Act economic relief. So there's a lot of different things you want to take advantage of, especially where everything's going virtual right now. Take advantage of all the different webinars that they're hosting and training and partnering with organizations such as, the Chamber and everything. There are a lot of different things that, you can take advantage of, and majority of it's free. So these are all the contacts for the different business organizations or centers that we connect with. Also too, when it comes to, we work with the Massachusetts Export Center. We work with the Massachusetts Procurement Technical Assistance Center. They help small businesses with government contracting, whether it's at the federal level or state level. That's a big assistance, because at the end of the day, right, we have to look at not only trying to keep your business afloat during this pandemic, but also where can you see your business going in the future. There may be opportunities to gain the federal government as a client or as a customer. Same thing at the state level. There's plenty of opportunities. Remember that the federal government is basically the largest buyer of products and services in the entire country. And I think we spend $500 to $600 billion a year on different products and services. And upwards of 23% of those dollars need to be contracted out to small businesses. And that might even increase, going forward into these next few years. So, there's a lot of opportunities, for small businesses to take advantage. Our office right now has been doing monthly trainings on the different aspects of federal contracting. So whether it's the different certifications that you as a small business owner may be able to take advantage of, maybe you're a disabled veteran, maybe you're a minority business owner, maybe you're a woman small business owner. There's certifications out there that actually might give you a little bit of an advantage when it comes to looking into certain contracts through the federal government. So, definitely, stay tuned to what we're doing at the office, because we do provide a lot of that information on different webinars and different networking sessions from month to month. And, just a breakdown of some other SBA programs and services, because I feel like, the SBA, a lot of folks always, thought SBA lending, and I think, and that's great, but the SBA has a variety of assistance that they help small businesses with. Of course, we have our main loan program. So you hear of 7A, or if you ever heard of Express, an Express loan. That's an SBA loan program that falls under the 7A program. 504 program, which is a loan program that helps small businesses, purchase, large pieces of equipment or commercial properties. And then we have a micro loan program. So we work with different micro lenders that help businesses that may be at a disadvantage, or new businesses or minority owned businesses with small dollar loans. If they weren't able to get conventional lending, for one reason or another. Like I was just saying, we have the federal contracting programs and several different certifications. So, please make sure you tune into, all the information we're giving out on that, because that's going to be really big going forward. We also have surety bond programs. If you're an electrician, if you're a contractor, you're probably familiar with surety bonds. You may need those for certain jobs. Maybe you're working on a hotel, whatever the case may be. The SBA actually partners with insurance agencies throughout the United States. I think here in Massachusetts, they partner with about 30 or so insurance agents to help provide better rates on surety bonds. And also the way it works too, you may be able to get a larger surety bond for a larger project. So, there's plenty of advantages there. And then also we work with exporting and trade assistance. So, expanding your business outside of the United States. There's grants that are run through the Mass Export Center that the SBA provides to them on a yearly basis to help, grow your business through exporting. And then also the SBA touches on research and development grants. So if you're in the tech industry, you're in health and services industry, and you have a product that or a service that might benefit, the government as a whole. The government wants to know about that, because there might be grants available to help you, get to certain stages to get that out to the general public. So, so it's all these different programs and services that can help your business, grow, in the future. And that's what we really want to make sure everybody has a full understanding of what these services are offered to you. Because we're all taxpayers. At the end of the day, we want to take advantage of these things. All right, so I am done with my end of things. I don't know if we wanted to open it up to questions first for this and then go to Cliff, or Cliff, do you want to do yours and then do questions at the end?
If there's some questions, meanwhile, Cliff, maybe you could switch.
Yeah, let me stop sharing on my end here.
Down, and then Cliff can get his added. If anyone does have any questions, feel free to unmute and just ask a question, or submit it through the chat line.
Here's the chat. Can we see the chat on here? Oh, I think I got it.
There we go. Can you all see that?
Yeah, I can see it, Cliff.
I'll run through this very quickly because I know we're running a little over, and I won't be long-winded, I promise. My name is Cliff Robbins, and I am the Senior Business Advisor with the Massachusetts Small Business Development Center Network. That's the name they gave us, MSBDC. The letters that took me 2 years to put them all in the right order. It's very confusing. All right, but I've been doing it for 18 years. We have a wonderful mission. I love this job. The Massachusetts Small Business Development Center, or MSBDC, our network provides high quality, in-depth business advising, training, and capital access, which contributes to the entrepreneurial growth of the small businesses throughout the state of Massachusetts. Every state has an SBDC. Massachusetts, the company that I work for, is called the University of Massachusetts in Amherst. Our services are free. We never charge for our services. I work with some of the best, brightest business minds I've ever worked with in my life. And I've started companies in my past history. Before I became a professor, I actually did this stuff. See the scars? I'm telling you, it's a tough road to hoe. We're here to help you manage to walk along that road a little bit more easily. I work with some wonderful people. You have a lady in your area, Nancy Loud, who's just fantastic. Worked with Nancy for more than 10, 15 years. I don't know. Time flies when you're having fun. Well, we actually have 3 business lines, as Dan mentioned. We are business advisors. We have an export assistance program that does happen to be Nancy Loud, one of her expertise, as well as being a business advisor. And we do have the PTAC, or Procurement Technical Assistance Center, the government sales. Again, as Dan said, they're the biggest purchasers of stuff and services in the world. Well, what we do, we are full-time, we are hired, we are paid. SCORE, wonderful organization. They're volunteers. They're retired people who volunteer to help you for free. We do this 40 hours a week, full-time. We're very highly qualified. Everybody has at least an MBA. We develop some very innovative solutions. We work with our clients, and I work with over 300 this year alone. We normally do between 120, 150. So it's been a very busy year to pivot, to change their business model, to brainstorm how they're going to survive or even thrive. We have partnerships with the SBA. Obviously, we get half of our funding from the SBA. Thanks, Dan. And we get funding from the University of Massachusetts. We get funding from the state. That's how we're full-time and we're paid. We have many partners. Chambers are a big partner, other universities, economic development agencies like SEED, Southeastern Economic Development, those type of people. We work with these people very closely. We are actually a very integrated network of services. And as I said, it includes government and international trade. Again, I'll go quickly through this. The Mass Export Center, Nancy Loud works for them as well as us, part-time each, and she's an expert at helping you find companies overseas to do business with. That's her email address. That's her phone number. That's how you contact Nancy Loud. PTAC, a little confusing. The government likes to put things on there that you can't understand, I guess. Procurement Technical Assistance Center. You want to do business with the government? This is who you go to. You contact these folks. Now that would be federal, state, local governments. And as Dan said, 23% has to be given to small businesses, right? You have to be in Massachusetts. You got to be in business for at least 2 years. You should have a business plan you can submit. And that's the website that you go to for P-TECH. In retail businesses, mostly 99% of the time, you're a manufacturer and you're selling something. Retail businesses, they're just buying products and selling in the B2C world or the business to consumer world. MSBDC.org/PTECH is how you would go and register, and somebody will get in touch with you. And just for some FYI stuff, in 2019, I just grabbed these numbers. We work with over 4,000 clients in Massachusetts. We provided over 25,000 hours of business advising. We have 15 agents around the state. As a matter of fact, here in Southeastern Massachusetts, because of the CARES Act, we just hired 3 more part-time, very highly qualified professionals to help with the overload of clients, small business people who are seeking advice. There's just some numbers here. I think the important one to show you is for every dollar that the state puts into the SBDC program, they get back $7.52 in revenue, tax revenue by the end of the year. You know, if your 401k was getting back $7.52, you know, we'd all be retired by now. All right. Our companies outperformed other companies as far as their sales go. This is research done by the state. They go out there and say, does this program work? Well, let me tell you, it works so well. Other countries are starting to adopt it. About a few years ago, the state director made a mistake, named me the state star again, went down to San Diego. I'm sitting at a table from people from Paraguay, Argentina. Everybody's adopting this SBDC model because it works. This is our office. Ours is Southeastern Mass. We cover, obviously, the Trouttown area. We go up to Route 28. I personally am here on Cape Cod. I cover Cape Cod and Plymouth. We go into Fall River, New Bedford. Our main office is in Fall River. We will assist you. We will help you develop a strategy. We will help you pivot. We'll help you put your business plan together. We'll help you grow your company. If you're struggling, I happen to have a gentleman who is an expert in turnaround. We do business advising, as I say. We do workshops, or right now they're webinars. We can help you start your business. Of course, you folks are probably already in business. We can help you develop your business plan. If you want to get money from John, you're going to have to submit a business plan, and you got to show him how you're going to pay him back. John's funny like that. All right? And we can help you put that together, put some numbers together that make sense. We can help you with your cash flow strategies. Look at, again, we provide very high quality business advice. We are actually financially reviewed every 2 years. We're programmatically reviewed. We got more reviews. We got those guys from the SBA in that office in Fall River so much reviewing everything we do. And we come out absolutely shining every single time, all right? I'm Cliff Robbins. I'm a senior business advisor. I cover Southeastern Massachusetts. I'm actually filling in for Nancy right now. She's better looking than I am, smarter too. Nancy Loud, Senior Business Advisor, is also the International Trade Advisor. Other folks in Southeastern Mass, if you're up near Quincy, we got Jill Beresford. Melinda Ailes is down in the Fall River, New Bedford area. And on this call is the woman who keeps me, or tries very hard to keep me from goofing up all the paperwork. Ann Fenton is our Client Services Coordinator. So please go to the website, give the office a call. Better off going to the website because there's nobody in the office right now. All right, go to the website, fill out a request for counseling. Somebody will get in touch with you, and we'll be happy to try to help you with your business. I hope I did that quickly. I didn't do it quickly, but I know I didn't want to keep everybody, too long.